Scalping the Forex market. It's not as scary as you might think. I've been mainly a swing trader for the past nearly a decade since I've been trading, but I have done scalping intermittently. I always stop scalping, clinging to the argument that, I could just make the same amount of money doing swing trading, but, I could do that by using like 1/10 of the amount of time. And what I've realized over the past week is that that's not actually true. You see, there's actually a lot of benefits to scalping that I had radically undermined over the course of my trading journey. And based on my modeling in not only my past results scalping, which I still got good results, it just, like I said, I thought it was a waste of time because swing trading, I'm like, okay, well, I could do the same amount of work. Like I could do 1/10 the amount of work, get the same results. However, what I found the past week is there are some misconceptions about scalping the Forex market that I just wanted to share. So, how's it gone? I started scalping a week ago. I started calling my trades a week ago in the Nick's Trades group. There's a link in the description for this, but it's just a Discord server where I call all my trades. I call my swing trades. I have the whole history for all of this year as well. And then here's some of the day trades. So this is essentially just the way I call trades out is I just place the trade and then I take a screenshot of my trading terminal. This is the chart terminal. Just showing the entries, the stop loss, the take profit. And it's the same risk per trade, right? Like 1 unit of risk. You can choose to risk however much you risk. It's $100, $10, $1,000. It doesn't matter. So this right here, I called a trade this morning on USDJPY. I entered a buy, showed the stop loss, the take profit. This one ended up going and hitting the take profit. And through all the profits, the break evens, the stop losses and everything, the past week that I've been running this, it has been plus 3 units of profit. So if you risk $1,000 per trade, about $3,000 of profit. And then you just magnify the risk for whatever you want. Multiply whatever your risk per trade is times 3. That's what the results are with all the wins and the losses. And I wanted to actually show you how I'm doing this because it's actually much simpler than I even thought that it was. Like, honestly, I thought it would be a real pain in the butt. I thought it would be kind of a lot to deal with. I thought it would be, all these misconceptions I feel like I had. But it's really not that big of a deal. I don't know. Like, one thing I think that's at the top of my list for scalping the Forex market in terms of like benefits and pros is that it gives you more trading opportunities. So for instance, like let's say you're swing trading. Let's say you get 2 trading opportunities per week. On average, let's say it's about 8 per month, right? So 8 trading opportunities per month on average. When you're in a losing streak, let's say 3, 4 trades in a row or even more sometimes, on a losing streak, that might take you 2 weeks or more to number one, go through it, but then to recover it with profits. And then you have to then try to make more profits based on the high watermark equity of where your account was at before the losing streak once you get it back. And then you got to make more to get past it. And this can take, in some cases like a month, right? Like routinely, I average 2, 3, 4 losing months per year. Okay. And some years it's been worse. Some years I've had no losing weeks or months or anything. Just 1 year. That was the 2022 trading year. I didn't have any down months that year, but aside from that, every other trading year, I've had a couple months losing or break even per year. And this is completely normal in trading. However, what I've found is that if you're scalping, meaning you're taking more trading opportunities, you're just using the lower time frames to help you make your trading decisions, like a 5-minute, 15-minute. I still even use the 1 hour because I consider the 1 hour kind of a lower time frame when compared to like daily and weekly charts. 1 hour is kind of a faster moving time frame. 1 hour, 15-minute, 5-minute, it gives you more trading opportunities. So those losing streaks can play out quicker. Your win streaks will play out quicker too, right? It's crazy. And what I found is if you're just using a 1-to-1 risk to reward ratio and you have slightly more than a 50% win rate, then you're profitable. Like, do the math, right? Let's say you win like 6 out of every 10 trades on average. There's going to be losing streaks of like 4 or 5 trades in a row at some point. Also going to be winning streaks of 4 or 5 trades in a row at some point, right? It's just bound to happen with statistics. But what I found is that if say like you can win 60% of trades, right? You're barely more than a break-even trader, but you're ahead of 90% of traders because you can just get it right a little bit more than not. If you win 6 out of 10 trades, that's 6 winners. That's just 6 units of profit minus the 4 units of loss if you're risking the same amount per trade. You come up roughly about 2R in profit after every 10 trades because we just do 6 minus 4, and that is left with 2 units of profit. If you're risking $1,000 per trade, that's $2,000 of profit after every 10 trades on average. Now, again, there's going to be losing streaks where like you lose 5 out of the 10 trades or more in a row. But given enough data, like at least 100 trades, but honestly, you need way more than that. Like I would say 500 to 1,000 trades before you can really start getting a feel for, oh wow, at one point I lost 7 trades in a row. Like this is why you need to structure the risk in such a way that they can still account for those losing streaks and you can still be profitable long term. But with that being said, if you're taking like say 2-3 trades a day versus right like 2 trades a week, you could have a losing streak that, it's a bad losing streak, right? You 4-trade losing streak. But to go through that losing streak and then to make things back and then end up in profit could only be like 1 week, right? You could like, starts Monday, you lose 2 trades. Tuesday comes, you lose 2 trades. Wednesday comes, you win 2 trades. Thursday comes, you win 2 trades. And then Friday comes and you win 1 trade, right? Even if on Friday, if you just break even, you've still ended the week like break even. So you were effectively out of the losing streak and then back to the P&L watermark of where your account was at equity-wise before the losing streak. But this only took like a couple days, right? Instead of like weeks, or in some cases even like 2-3 months to dig yourself out of like a losing streak, recover it all, and then make profits past the watermark and continuing to send the equity curve hopefully up and to the right. So what I found is lower time frames, provided that you have a 50%, lower time frames, provided that you have above a 50% win rate, are actually quite incredible because it gives you more trades, more repetitions. The only thing that has to be true is that if you're trading with a 1-to-1 risk reward ratio, you have to have at least more than a 50% win rate. Even if you're trading with a 1-to-2 risk reward ratio, or even in some cases, if you're using a negative risk reward ratio, which is fine, like risking 2 units of risk for 1 unit of gain. With those, random chance suggests you're going to win like 75% of trades with a negative risk reward ratio for 2 units of risk for 1 unit of gain. So you're roughly going to break even. So you still need an edge, right? You need to maybe win 80 to 85% of trades if you're using a 2 units of risk for 1 unit of reward. And the same thing's going to apply if you're using positive risk reward, right? You have 1 unit of risk for 2 units of gain. You need to have a slight edge because while you may only win like 25% of trades like that, that's going to allow you to break even because every time you win double what you lose, but you only win 25% of the time on average. What really matters here is the fact that you have some sort of an edge, right? How do you get this edge? Just experience. You don't have to buy anyone's course. You don't have to go to any type of university or college education. You just trade for like a year or 2. That should usually, in most cases, give you enough experience to start kind of making a little bit of traction. Most people fail at trading. It's really risky and most people lose money, and you're probably going to lose money too anyway. But I'm just sharing you what seems to have worked for me because I've been doing this for almost a decade now. And I just find that no matter whether you're swing trading or scalping, positive risk reward, negative risk reward, neutral risk reward, literally just 1-to-1, balls to the wall, make a little bit more than you lose. You're right a little bit more than you're not. All these things come together to dictate whether or not you're profitable. So I'm going to show you how I trade the lower time frames, and I'm going to try to get as pragmatic as I can. I want to deliver all this with kind of the underwritten tone that trading is ridiculously subjective, okay? You could see me say, just in the next few minutes, you could see me say, yeah, price is at a support zone, so it's already bounced there, so I'm not going to buy, even though it's at support. And then like a minute after that, I could say, yeah, but this other trade I took because it was at a support zone, then I bought. So then you might be thinking to yourself, like, Nick said he wouldn't buy at a support zone in one trading opportunity, but in another one, he said he would buy at a support zone. A lot of this just becomes very difficult to really try to put into terms of a black and white, rigid, rules-based trading strategy, right? Like I've said numerous times on my channel that those things don't even exist. All of it is up to your subjective interpretation of what price action is doing. Having trading rules just kind of puts a middleman in between you and price action, right? There's price action, which people say price is king, price action is king. I don't, whatever, right? It's just the price goes up and down on the chart and you're looking at that. But then you try to filter those through these things called trading rules. And you tell yourself, okay, if price is in a trend and then it pulls back and then it's 50% Fibonacci and then it's a break and retest of a support resistance level, and then I have an entry here in a 1-to-2 risk reward ratio and a win rate of 75% or 80% or 85% or whatever, then you have all these things in place you can be profitable. However, there's going to be multiple times where you don't actually take a trade, even though the trading opportunity is set up in a way that sort of aligned with your rules, right? Whether you have 3 rules, 5 rules, 10 rules, 20 rules, 30 rules for your trades, whatever the case may be, it just becomes a case of you still having to use your subjective interpretation of those rules to make trading decisions. So I just say, to heck with the rules. Let's just look at the chart and let's just trade, right? So that's what I'm going to be showing you. So let me just show you some of the trades that I took. So whenever we go back in here, I'm going to show you my actual trading terminal, right? So this was GBP AUD. Why did I take this trade? Price had made a higher high, and I thought price was likely to have a reversion back to the downside. So to get this trade, I looked at the 1 hour, the 15 minute, and the 5 minute. And that was the first trade on this trading account because I started it with 50K and, we're trying to get it to 100K. The next trade that I took was USD/JPY. I bought thinking that price was going to have a continuation to the upside. I ended up being wrong about that, so that one stopped out. UJ hit the stop loss for -1R. And then GBP AUD hit the take profit, right? So this is what it looked like on the 1 hour. What you saw initially was the 5 minute chart. This whole trade, keep in mind, it was based on price just went really far in one direction and it made a new high. And I just thought it was going to pull back, right? It's all my intuition and discretion coming into play. And I was like, looks like a good sell. So I put a sell, put a stop loss above, target below, 1-to-1 risk reward ratio. My win rate's barely more than 50%, but it's just enough to allow me to squeeze out a few nickels of profit here and there. So GBP AUD fell and that was that. So yeah, the loss on UJ with the win on GBP AUD. So we had some more trades coming in here. So I rolled up with USD/JPY and I sold right here with a stop above, then a target below. So this might look kind of hard to see right here. We'll just go to UJ. I'll just show you this right here. All right, so I believe it was like right here. Price was going in between some highs, going in between some lows. When I was looking at this, it looked something like that. And I thought that price was just going to go and test the lows again, right? A lot of it is just looking at it and kind of like having that feel, right? That feel of like, what does price want to do? Where's the path of least resistance? Price was bouncing at support, resistance, and it came back. It bounced at the resistance and it was going down. So I thought, okay, if it's going to continue to the support, it's probably going to do so very soon, and it probably won't break the recent high if it goes to support. So what kind of trade was this? Was it a trend trade? Was it a range trade? Was it a mean reversion trade? I don't really know. Like, it's just price action, right? It is literally all my intuition, just like, I think it'll go up. If you wouldn't call that a strategy, that's perfectly fine. I'm a manual trader. I don't use any algos or any type of automated trading systems to help me make decisions. It is literally just pure intuition, which honestly, every manual trader who trades with just, them looking at the charts, making trading decisions manually, they are using intuition, because otherwise, like if you truly have black and white rules, you can code it into an algorithm or an automated system. And most people just can't do that. And they won't do that because it won't even work to begin with. Intuition and discretion really is what makes it or breaks it. So that one ended up working out. It actually ended up working out in like 11 minutes. It just crashed into the support zone, hit the profit target. So that was good. So that was plus 1 hour. Another thing that I'm doing in the group here is I do the P&L after each trade. So like after each trade wins or loses or breaks even, or as a partial win or a partial loss, I just put what the P&L for that outcome was, like, minus 1R, plus 1R, minus 0.5R. And then below that, I'll put the cumulative P&L. So that way it shows everything like up to date. So if you're joining the Nick's Trades group and it's like months into the future, you'll see that cumulative P&L sitting right there. So that way you can track it very easily throughout the whole time. It's like sequentially tracked, everything live in real time. So that way it's way easier to kind of get a feel for how the system performs long term. So that way, because the problem is like, I run a trading business, right? I charge people a monthly fee so they can follow my trades. And the problem I've run into in the past with swing trading is that when everyone joins, they may go through like a month or two of like, they see like a losing streak or like a break even period where it's like 2 months of just nothing but like wins and losses, and it's roughly just break even. And that doesn't really give the best perspective of what the long-term approach performs like. And so I would have people coming and then they'd see like, wow, you'd lost for the whole month and the month was down. And then they leave and then they never get to see all the stats play out long-term. Putting the cumulative P&L there shows that like, hey, here's how it's performed like to date, right? Like long-term since the inception of when I started doing this, which for now is a week ago. We're in the infancy, the very beginning. Putting that there allows people to see how it performs long-term. So that way they can see all the ups and downs, and that even when there's a losing streak, right? Let's say I get to the point where it's like 48R, like 48, but then we go on a 4-trade losing streak. the cumulative P&L will still be 44R, right? Which is still amazing, right? So that reminds people that like, hey, long term, everything, all of this has been profitable, and there's no way you can like, manipulate that because it's all live in real time with timestamps. If people aren't trading live, you shouldn't even be listening to what they're saying. That's why I trade live, and that's why I've been doing it for 6 years. So with that said, that one hit the take profit. I had another one here. I had a Euro USD trade. So why did I take this? You'll see this is on the 1 hour, but I used the lower time frames like the 5 minute and 15 minute. It looked to me like it was in a downtrend and we had a pullback, and then it started to turn around and go into profit. So normally the price is making lower lows and lower highs. Then it pushes up, makes a lower high, then it starts to turn back around to the downside. If that is going to continue, the trend, it's at least going to go to the previous low in most cases. In every case, if the trend continues, it's at least going to go to the previous low, right? And usually it'll break past it. But it'll at least go to the previous low, and it will usually do that without knocking out the previous high that was made. So I put an entry here. I put a stop loss above the recent high that was just made, and then a target right here. This was actually before the previous low, right? So much safer take profit, not trying to be a hero, not trying to target like a crazy lower low, just targeting like essentially like the previous low. If you're counting spread and everything, it has to go a little bit further. But so this one was good. It went down and hit the take profit. It looks like this one took 11:26 a.m. to 1:47 p.m. So this one took about 2 hours. Another thing I want to say about this is people say scalping is really complicated. There's a lot of moving parts, and you're having to watch price action, and you're having to do this and that, and it's too crazy. People say that like they say they don't have the brain for it, right? People say things like it's too hectic on the lower time frames. I can't say I agree with that anymore. I just can't say I think I strongly disagree with that. Scalping, I'm actually able to go to bed almost every night without being in a trade. There are sometimes I'll hold a trade into the next trading day, and then I'll close, at some point in the future or something. And there are times where, how do I say it? Like I'll hold it into the next trading day and then hold it overnight, and then I'll wake up the next morning and I'll still be in it. And that's okay. But like the longest trade duration for the trades that I took here so far this past week, we have just under 10 trading opportunities right now. The longest trade was 2 days, right? And most trades are like a few hours or less. Like you think about that. You have people saying like, okay, swing trading is more easy, but you're having to sit through trades long term. And again, I am still a swing trader. I've got nothing bad to say about swing trading. I still like it. It's just another approach, right? Just like every other approach. There's high frequency trading. You're in and out of trades in seconds. There's like day trading like me where trades usually are closed in the same day, but sometimes it's a couple of hours, sometimes it's a day or two. Then you have swing traders and position traders who are in trades sometimes for like weeks or months. There's no right or wrong way to do it. But what I am saying is whenever you're swing trading, you may be in one trading opportunity that you've planned out, you've meticulously planned the risk structure, you've got everything all set up, and it gets to the point where you've sat in that trade for a week, and then 2 weeks, and then 3 weeks, and then you're going through every night, you're going to sleep, knowing you're in the trade, wondering what it's going to be doing the next morning. In some cases, this has probably happened to you before. You wake up, and then you look at your phone in the middle of the night, and you're like sweating, and you're like wondering what's going to happen. By the way, if that's happened to you, let me know in the comments. Just put it below. I want to see how many of you guys actually say that's happened to you, because that's happened to me like more times than I am. More times I'm like too embarrassed to even admit. I can't say I do that anymore though, but still, for a lot of traders, that significantly impacts their psychology because they're having to monitor these swing trades the whole time, right? What is more work, honestly? Getting in a swing trade, watching it day after day after day after day, sitting through all the news events, sitting through all the volatility, watching it come 15 pips within your stop loss. Then it goes back to break even. Then it starts ranging, and then it's 3 weeks later. Then you just close it at break even because you don't think it's going anywhere. And then right after you close it, it would have ended up going to your profit target the next day or two. What is more work? Being in a trade for a few hours, and then it's done, and the result is there, win or lose. Or being in a trade for a few weeks. Again, I'm not saying anything's right or wrong. I'm just asking you, what's more work? Some people will say different things. Swing traders will say, it's not that much work because I don't really watch it. I just let it hit TP or stop loss, and I don't really look at it every day, which I don't think is what most people are doing. And then day traders will say, well, it's not that big of a deal because I enter the trade and then I just have the stop loss or take profit, and then it works or it doesn't. So honestly, like the amount of work I do is maybe like less than a minute, right? I look at the chart, I'm like, oh yeah, there's a trading opportunity. I enter, get my position sizing right, get the stop loss, take profit in place, all the parameters are checked. Maybe someone goes and monitors news for a second before doing it, but they'll do that, and then the trade ends up playing out. Who's really more stressed out here, right? Is it the swing trader or is it the scalper? It's not completely clear. What I think is that a lot of people will exaggerate how much work it is to do scalping and trading on lower time frames. That's one of the reasons I'm making this video, is because I think this is a misapprehension. A lot of these trades I've taken, like I've done in the MFX Nicks Trades group, I do live sessions like almost every day, like at least 3 days out of week, sometimes 4, sometimes 5. And what I do is I'll take the trades live on the session. We'll spend most of the session just chatting about random crap, right? Like today's session, we went for 3 hours. So it's usually around 7 a.m. Central Standard Time here in Texas. And so I'll start from 7 a.m. Today we went to like 10 a.m. Some days we'll just go to 8 a.m., 9 a.m. It just kind of depends on what the market's doing. But what I found is that there's not really much work to do, right? There's like, it's glancing at the chart, it's setting alerts. You can go about your morning routine doing whatever the hell you want. And then you get the alert, oh, price is at the zone or area you thought it would enter at. Maybe it's a trend trade and it's pulled back and it's the place you thought would be a good entry. Maybe it's gone, made a lower low and it's at a support zone and you had thought you would buy right there. So you think about entering whenever the alert gets hit. But in either case, like, it's not really that much work. And I mean, maybe I'm stepping on some toes here, but I don't really care. That's just my opinion, right? Like from what I'm doing it, like practically over the course of like the past 9 years I've been trading and the variable times that I have traded, like doing scalping on lower time frames. And also right now, it doesn't seem like much work to me. If anything, this may sound insane. If you disagree with me in the comments, please let me know and then like type out an explanation why. But if anything, I think that scalping is actually a little bit less work, meaning when compared to swing trading, it's just less mentally taxing. And again, I hear so many arguments to the contrary. My personal firsthand subjective experience is that the trades play out so much quicker. I can be flat pretty much every day for the most part, like towards the evening and the night. There's no holding trades into the next trading day or overnight, usually, though it still happens every now and then. And I'm just in positions for usually a few hours at a time. And then it's either win or a loss or a break even. I just make my peace with it and move on. Scalping in the Forex market is really, oh no, it's not that bad in my opinion. So that Euro USD played out. You can see I have the take profit was plus 1R. Then I have the cumulative P&L below that. This one was another one I called on USD JPY. You can see it's the minute 5 chart. Again, I used minute 5, 15, and 1 hour. But it had gone really far in one direction. I just thought it would fall. A lot of people will go really down into the rabbit hole with all of their fancy explanations and interpretations of like the price did this and then it has like, a Wyckoff structure with a liquidity spike above the accumulation zone and the demand zone with price falling back in. And this was the upwards thrust after distribution. So now price will have it from. I look at the chart and I'm like, dude, it's been going up for a while. Like it's just made a new higher high. Usually there's pullbacks at some point in a market that's mean reverting, like Forex market. And so like, I just think it's going to go down. So I'm just going to sell because it's gone really far in one direction. Like it can truly be that simple, right? You can control risk using a DCA risk structure, which is where you essentially just use small position sizing and continue to scale into the loser until it comes back. In most cases, you'll get out of those unprofitable. And every now and then you will blow an account doing that because you get those one of those trading opportunities that doesn't play out. Or you can just use a stop loss. It's kind of the same thing because if you're using DCA trading and grid trading and recovery trading, like adding to losing trades, you treat the account as the stop loss, right? Like say you have $1 million to trade with and you put 50K into the account, you're risking 5% of your trading capital and you're betting that on the likelihood that you'll grow the account more than you blow the account. You can do that, or you can just use a stop loss, or you can use hedging, or you can use, whatever else little magical risk management strategy you have. Everything has worked for me. Stop losses, DCA, grid trading, hedging, like all sorts of different stuff. So I sold USD JPY and Euro USD. This was another one. The Euro USD was the same sort of reason. It just made a new high. I thought it was going to bounce right here, right? It made a high right here, tried to pull back. tried to make another high, but then quickly started to fall. So I thought maybe it's going to fail right here and have a reversion to the downside. And here were the results. Euro USD went from right here down to here. So it hit the profit target. And you can see right there, I put EU TP +1, cumulative PNL +3R. And then this was USDJPY. You can see how I sold right here. That was the initial part. It actually went like more than halfway to the profit target, but then it reverted back to the upside and started making higher lows. So what did I do? I put the screenshot there of the moment that I closed, and then I put UJ partial loss, and the cumulative PNL was now plus 2.5R. So why did I close this at a loss? This is the fun part of trading, right? You get to use your discretion to make these types of decisions. This went into profit. The downside momentum failed. It didn't continue. It broke one of the recent highs when it spiked past it here. Came down and touched that previous high as support. Bounced again as support. Tried to bounce here as resistance, then pushed right back up right here. So it was just making a bunch of higher lows. I looked at the chart and I was like, yeah, dude, I don't know. I don't think this is going to work out. So I just opted to close it. And it ended up being a good decision because this one would have stopped out. But instead of a stop out, I was able to kind of recognize like, that's probably going up. Not enough to the point where I want to close the trade, not enough to the point where I want to enter a buy, but enough to the point where I do want to close a sell. So just because you think price might no longer be likely to go in the original direction, you make the decision to close. It's a risk management decision, right? It's a decision such as where you're like, I don't know if I think it'll go up or down anymore, but I don't really have an opinion anymore. I initially did. I thought it was going to go down, so I was short. But now, I don't know. It could go either way, right? You know, price actions developed over the course of a few hours. You're watching it. You're just like, I don't know. I don't think this is going to work out, right? Each trade has its own story, and the price action that plays out after you enter can help inform you on what would be the best types of discretionary decisions to make after you get experience. Because if you don't have experience, it's like you're just like flipping a coin, right? If you don't have experience and you're just using 1-to-1 risk-reward ratios and letting it hit stop loss or take profit and never closing early, over a long enough time, you're probably going to have roughly a break-even win rate, which is actually pretty good. Because if it's a 50% win rate and a break-even trading approach, then you're doing better than 90% of people who are in fact losing money because trading is risky and most traders lose money. Doing it this way just allows you to kind of have a little bit more of a dynamic way of managing trades. So that was a partial loss. Then what I did right after is, since this one I actually thought would go up, so I actually entered a buy, and you can see my stop loss was down here, my take profit was up there. Right here is where I closed at break even. I believe, maybe I'm mistaken, but I think this was a Friday, or it was getting close to the end of a trading session. It was one of those two. And I thought that, like, yeah, so I entered buys. Yeah, I'm sorry, I was confused because there was the sells, there was the closure, then there was immediate buy. So that's why all of them are right there. I was trying to see where the position is. But I had bought there. You can see it was like just barely in profit, so essentially break even. And I thought, okay, price tried to go up. The momentum kind of fizzled out. It's coming back, and it's getting close to market changeover or the weekend, whichever one it was. And so I thought it might be better to close it right there. So I put UJ break even, and cumulative P&L was plus 2.5R. So there's that. This is just me sending a message about the live trading session that happened on, I think this was for Mondays. What I do is I send the Zoom links out in the Nick's Trades group. So that way, like whenever I start the session, I put the Zoom link in there. And then as long as the Zoom link is there, the session's active. We're still on. We're still hanging out. It's a bunch of banter. We're live trading and everything. And then whenever the session's over, I just delete the live session link. So that way nobody sees it sitting there and they're joining within the live session's not even on and they're confused. So like the links get posted there when the live session starts, and then I remove them after. So if you're in Nick's Trades, that's how it works. And again, I don't know, maybe you're in Europe or you're in some other, country and the time zones are different, but it's around 7 a.m. Central Standard Time at this point in time right now when I'm doing all this. Maybe you're watching this 10 years from now and the Nick's Trades group doesn't even exist. But as of right now, that's how it works. So if you're joining any time in the near future, then that's how it works. So this was a USDJPY trade. So this was more of a trend trade. You can see like price went up, it pulled back, started to bounce here, and then it went up, and so I bought. So I bought, it ended up going further up. This was taken on the live session on Monday. It went near the take profit, then it pulled back and ended up closing it halfway to the take profit just because I thought that price would be having a reversion further back. So you can see right here, I put the screenshot of the moment I closed it, which was right there. And I put UJ partial take profit plus 0.5R. Cumulative P&L was plus 3R. And UJ would have ended up coming back and stopping out had I not done that. So power of discretion. This was a Euro USD trade. I thought that this was going to have a movement back here to the support. It bounced off the major resistance zone, broke through, came to support, came back and tested, failed to get above it with all these wicks. So I sold as it came back. What I ended up doing was so this was another trade, a separate trade that I took at the same time, which was a buy on USDJPY. So these were yesterday. You can see this was just a buy at support, right? One of the simpler trades. Every now and then you get a trade that's truly that simple. You're like, why did you take it, Sir Guru FX Nick Sean? And I'm just like, it's a support zone. And the person's like, okay, fair enough. So I bought at support, put a stop loss below, put a take profit at a 1-to-1 risk reward ratio. And yeah, so let's see what happens. So EU hit the stop loss. This one just ran up really quickly, knocked out the stop. That was that. You can see EU stop loss minus 1R. Then I put the cumulative P&L of plus 2R because it was 3R, the lost one. Now it's plus 2R. So Euro USD, this one came down after it. Look at this crap, right? It hit the stop loss. It immediately came back. That'll happen every now and then. Super frustrating, but I don't know. I can't say I really get that frustrated anymore with trading because I've just seen so much. So what I thought is, okay, it tried to get above, quickly failed, came back down. Now I think it'll go, so I sold. So I ended up closing this one at break even on UJ. This was the buy at support. It broke below the support, then it started going up, then it started kind of going sideways, and it was getting close to the session changeover. Session changeover happens at 4 p.m. my time. Another cool thing is this is timestamped too, since I just do the screenshot of my trading terminal, right? There's no BS trash like calling out the trade like USDJPY long at this price with the stop loss here and take profit here. No, I just show the actual damn trading terminal that I'm trading on. Otherwise, like, you can fake and manipulate so much stuff if you're not doing it that way, which is why I generally just show a screenshot of my trading terminal. So this was at 142. The session changeover was in like 2 hours, and it was ranging here. So I closed it right there. UJ break evens plus 0R, cumulative P&L plus 2R. By the way, that UJ trade ended up bouncing. Look at what just happened. That's pretty crazy. Anyway, let's talk about what actually happened yesterday. So it ended up going up right here. It would have hit the take profit, but you can't predict that every time, right? Like, you're going to close and sometimes it'll go to the stop loss and then you avoided a stop out, right? It was a break even or it was a partial loss or something. This one, it would have hit the take profit, but I closed early. But hey, it was plus 0, like, right? So I say plus 0. It's kind of funny. Like, I kept my money in my pocket, right? There was no win. There was no loss. I just removed the risk from the table, and I'm fine with that decision. So price went up. I think this is the Fed interest rate. Yeah, it's probably the interest rate decision because that came out today for the US dollar, and I think the Japanese yen comes out later today. That's probably why we're seeing a huge spike right here. So yeah, so that was a nice trade on USDJPY that I did not make any money on. So then the Euro USD trade ended up going down here, barely missed the profit target. Look how close it came, right? This was 2 hours after the session changeover. Barely missed the take profit. Came back to the zone. I thought it would be a better idea to close it at break even there. Let's do a post-mortem on that and see what would have happened. So I closed right here. It would have gone against me further, but it would not have broken the recent high. Yeah, it would not have broken the high. So this one actually would have hit the take profit too. So just goes to show you can close trades early and sometimes it'll save you. I think I've actually saved more money by closing trades early so far than I have by holding them to take profit or stop loss. Like, no, it's to take profit or stop loss or bust. There's nothing else. I think it's better to use like sort of a discretionary, like subjective, like risk structure whenever you're using stop losses. That way you can just get the hell out of trades that don't look like they're working, right? Every now and then it's going to happen where it continues to go to the target right after you closed it. But there are also so many things that can happen if you don't close it and you don't feel like it's a good trade to stay in, right? Because then you end up staying in a trade because of your original logic and you haven't updated your new logic based on the new price action that has gotten painted after you enter the trade. I do think that looking at price action and making those kind of discretionary decisions really does help manual traders in particular both achieve and then sustain profitability. And that's just my opinion. Maybe I'm wrong, but close the trade early if it looks like shit. That's the advice, but not financial advice. Just a generalized suggestion for educational and entertainment purposes only. So let's go ahead and wrap it up here with the last few trades. So this was today. This is the last trade, right? So far. So this is the whole week of data. It was a USDJPY trade. I actually missed a sell up here initially because I was going to take that sell. I think I was talking to someone on the live session so we were talking about religion or politics or something, and I just missed the trade. But it didn't quite go all the way into the zone though, so maybe I wouldn't have taken it anyway. But that fell. We did take this buy right here. I called this out on the session. So this would have been about an hour into the live session. And then it was closed about an hour and a half. We'll just say 2 hours later, right? So like an hour and a half to 2 hours later, price, it bounced, then it came back, bounced again, then it went up and hit the profit target and made a higher high. What was the reason for this trade? It's really, really complicated. Are you with me? It was going to take me about 45 minutes to explain this, so pay attention. Price was in an uptrend, meaning it was just making like higher highs, higher lows, higher highs, and then it pulled back. And I thought it would make a higher low here and go up, and so I bought. So it was an uptrend, in my opinion, and price had pulled back, and I bought. You can also say that it was like a break and retest of the support resistance zone. You could also say it was, what is this, a 50% Fibonacci thing? If you start the Fibonacci there and you drag it up to here, it pulled back 50% of the previous impulse upwards. And, the 50%, 61.8% Fibonacci. So it was a really good Fibonacci trade. Look, I thought it was going to go up, right? It was making higher highs, higher lows, clustering up here into the zone, shot up, pulled back, and then started to bounce. And I thought it might bounce and move upwards. So I bought, and I put a stop loss below the zone and also below the recent low. There's the low right there, and there's my stop loss down here. And this is the zone I'm trading off of. And the target was actually just this resistance zone, which was right here above price. It was based, so price had bounced the support right there as resistance here, as resistance again here, but I thought it might go a little bit more. So that my take profit was actually, it was the resistance zone, but it was just a little bit deeper, right? A little bit further up into the zone. You'll see it had to knock out the high in order to fill the take profit. So it barely knocked out the high. It was good, kept going. Looks like afterwards it made a higher high, then it pulled back even more, and then now we've got this federal interest rate decision, which caused price to go up. Let me see what crypto is doing today. Still sitting around 104. So yeah, that's still the same thing. So I don't know. Interest rates will screw things up. A little word of caution when you're scalping. From my experience, it's good to look at the high impact news events. So you can use like Forex Factory, or I use my FX book. Go into the actual settings and then change it to just seeing the high impact news folders. So in Forex Factor, I think it's like orange folder. On my FX book, it's a red folder news. You just want to see what the high impacts news are. So here's all you need to do. If you want to scalp and you just want to ensure that you don't get screwed by crazy news spikes like that just happened with the interest rate decision, go to just type in my FX book economic calendar, and it will take you to my FX book's website where they have the economic calendar. And then change filter the settings to just show like red folder news, just the high impact news events. Then what you know is if you're about to place a trade, say on USDJPY, and you see that there happens to be a high impact USD news event, maybe it's an interest rate decision in like 5 minutes from the moment you're about to enter, then you might just decide to not do that. And here's why. Really, it's two reasons. First reason, spreads increase a lot, and spreads will throw you out in scalping very easily. During high impact news events, when price spikes one direction or another really, really quickly, the spreads can widen so big that even if you're right, it hits your stop loss, and then it goes in the right direction. It just gets really hairy. It gets to be a volatile train wreck. So that's the first thing is spreads. Second thing is there's no way for you to make a reactionary discretionary decision at a speed that would be necessary to be able to do it in a sort of consistent and predictable way. So meaning like there's cases where I can kind of read the writing on the wall, right? I'm reading the tea leaves and everything, and I'm using my intuition. I'm like, that just doesn't look like it's going to win. I'm going to close it. Guess what? If the news spike happens in like 5 seconds, there's zero time for you to make a decision, right? This price could spike really far, and then before you even get the time, you're like, oh, I need to close this early. Well, it's already hit your stop loss, or the spread has gotten so wide that the spread hits your stop loss. So the takeaway is if you're going to be scalping, look at the economic calendar, and if there's high impact news events, especially like a cluster F minefield of news events, perhaps make the decision to just say, well, I guess I just won't trade that. I'll just wait till the news happens. Then I'll come and start trading afterwards. When you're swing trading, news does not matter at all, in my opinion. Just if you use technical analysis swing trading and you've got like a risk structure in place, if it's DCA, you've just put a balance into the account you're prepared to lose in case it blows. And then if you're using stops, just put your stop in a logical location. Sometimes the stop can be hundreds of pips away if you're using swing trading, right? You can have a 400 pip stop, 400 pip target, and then just manage it dynamically, whether you close earlier at a loss or break even or a profit. If a news event spike comes and it spikes up, 50 pips or 30 pips or something, it's not going to really screw the whole rationality and logic of the actual trade. So in swing trading, news doesn't really matter at all, right? As long as you have a risk structure. Like a stop loss or DCA or hedge. If you're using hedging, right, enter an opposite and equal trade. You can still do all that. News doesn't matter. On lower time frames of scalping, I have found it matters very much. So it's good to just check the news. You don't have to speculate on what the news is going to do. I think that's a fool's game. I tried to do that in 2020. I got mixed results. I think at best it did nothing, and at worst it just made it more tedious and time consuming and confusing. Trying to predict which way news will go, like saying like, yeah, bro, the trade goods report came out for the US dollar, and bro, like, it was better than expected. So that means that the US dollar is going to go up, right, bro? Like that's what's going to happen, man. This is going to go up because the dollar gets stronger. And the news comes out and then it's way better than expected, but the dollar tanks and it goes down, and you thought it would go up. And now you feel sad inside, and you're sitting in a room crying, and you're just wishing you would have listened to Nick Sean saying like, hey man, it's really hard to predict news. Maybe you just shouldn't try to predict news anymore. Then you wouldn't be crying in a corner. I don't know. It's one of these things where even if you get experience, like I have only seen one person that has been a client of mine. And this is after thousands of clients at MFX for over the past, it's about to be 7 years since I've been running the company. I've seen one person, this Russian dude, who was somehow able to figure it out. He looked at the commitment of traders report data, and he looked at economic news on the calendar. And then he was looking at, I think, a website called I can't remember the name of it, but he was looking like at news events that were coming out like moment by moment, like Japan, there was an explosion at a factory and it's going to damage the trade goods and add to the deficit or surplus or whatever for the country. So it's going to impact, Japan or China or something. And he was like doing all this crazy stuff, and he was able to do it pretty consistently, right? Not like 100% of the time, but he was able to somehow do that and pair that with a risk structure that worked for him. I don't know, it worked for him. What I'm saying is he is the exception to the rule. Most people I've tried to figure out how to predict where news is going, like, yeah, bro, dude, the dollar's going to weaken against the yen. So, bro, it's going to go down, man, because the news and the economic calendar said so, bro, because it was worse than expected news. So that means it's going to go down, right? It's bad for the dollar. And then it just rockets up. It's no better than 50-50 in terms of predicting, right? It's going to spike up or down. All you do know is that during a high impact news events, there's a high enough likelihood that there's going to be significant amounts of volatility. So it might prevent you from taking trades, and stuff like that. So we have a little thing where whenever you get to the end of a video, I kind of congratulate you here. I shake you warmly by the hand. Well, it's a video, so I can't actually physically come over there and shake you. But so anyway, I essentially say like a number, and then whenever you go and leave a comment on this video, if you want to like the video, cool, that does help the channel. I'm not going to ask you to, because you're an adult. You should do whatever the hell you want. If you don't like the video, don't like it. If you like it and you want to hit the like button, that's fine too. But when you go leave a comment below this video, which you should leave a comment because it engages and you can share something that you learned during the video, You can share something that I talked about that you may agree with or disagree with, and then give your reasons why. Then it can kind of spark a conversation, right? It just makes the comment sections more fun to scroll whenever it's really like lit and there's a bunch of people like leaving stuff. So the number that I will give you right now is, let's be real cheeky here, as you guys in the UK would say, 69. That's the number. Just write 69. Somewhere, don't put it at the beginning of your comment. Put it somewhere in the middle of your comment, like creatively, right? Just include the number 69 in there somewhere. And what I'll do is the first 24 hours, every comment that I see that has that number in it somewhere in the comment, I'll heart it. And then if you ask a question, I'll try to respond to you. The last video I did this, we got so many comments. I didn't realize this many of you watch my videos to the end. Honestly, I feel like I'm the only one here at most points during this video, because the vast majority of people have clicked off and not made it to the end, right? It's like, I think 80% of people click off, 20% of people make it to the end of the video, because my videos are like long form and I take some time to unpack all this stuff, and I even have time to crack a few jokes. So for those of you who make it here to the end, I don't know, I really want to give back to you guys, because though you people, those of you who make it to the ends of my videos are more likely to apply the stuff I talk about, actually learn from it, actually get influenced in such a way that it positively impacts your trading journey. And it's good for me, because a lot of you who are making it here to the ends of these videos and getting value, you end up becoming clients, right? You end up joining MFX Nick's Trades. You end up joining the live sessions that I do every morning in the Nick's Trades group. You guys actually end up becoming clients. So like, you are my ideal customers and my ideal clients, and the people that are most likely to get results trading, in my opinion, though I obviously can't guarantee anything, whatever. So with that being said, yeah, just leave that number somewhere in the comments, just like, somewhere in your comment, but don't put it at the beginning or the end. Just like work it in there somehow. Like, I don't know, make it creative, something interesting. Y'all surprise me. It's a very interesting number to work with. And I already know what the number for the next video is going to be, and it's going to be 3 digits, and you probably know which number it's going to be for the next video. But yeah, for this one, it's that number that I said earlier, that 2-digit number, and you just put it in the comments, and then I will go and try to respond to you, or at least like heart all the messages. And if you ask a question or you want to engage in a discussion, I'll be a little bit active in there for the first 24 hours. So with that being said, I hope you enjoyed this video. You made it here to the end again. Cheers to you, my friend. I'm happy you're here. I hope you have an amazing rest of the day. See ya.